Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to the Tax Talk with AJ right here on your favorite TV channel. That's ITV Gold. This is a show brings you all that you need to know when it comes to taxes, your personal taxes as well as the professional taxes. I know you must be saying it, tax season is almost over. That is true. Tax season is almost over. But you know what? Tax talk never gets over because there's always something to talk about when it comes to taxes. Tax season is over. Hopefully you have filed your taxes or you have filed your extensions, whatever that might be. Maybe you are unhappy with the way that your accountant filed your taxes, or even if you did it by yourself and you think that you are paying money to IRS and you are not happy with it. I tell you what. For the next year, you can keep Sai CPA Services phone number and their website handy. Do give them a call ahead of the time before the tax season starts and let them see your tax returns and advise you that how to do your taxes right. And if you are able to get refund, how that you can get refund, that Sai CPA Services, their experienced, knowledgeable CPAs will advise you. Their phone number is 908-380-6876 and their website is saicpaservices.com. And remember, no question is a silly question when it comes to your taxes. You must pay your taxes, but you must do your tax return right. And that's what Sai CPA Services is all about. So as we are now winding down the tax season, but there's always, this is going to be very, very important conversation we're going to have in today's episode. And for that, once again, I'd like to welcome Mr. A.J. Kumar of Sai CPA Services. Good to have you, sir.
Thank you, Sanjeevji. Thank you for the kind introduction.
Yes.
Appreciate it.
You know, for CPAs like you, season never ends. Even though, you know, April 18th, the tax deadline for the personal tax returns will be gone soon. But then after, there will be a follow-up. And the follow-up is, let's say whoever filed their tax returns and IRS, they use certain algorithm to go through it and pick out certain tax returns for the audit purpose. And when you get a letter in the mail that, you know, your tax return is being audited, or they actually send you a letter, your tax is due this much, right? You owe $1,000, $2,000, $3,000 because blah, blah, blah. So now let's talk about, you know, the IRS Audit Red Flags. What are they and how should we prepare ourselves for that?
Absolutely. So the timing is perfect. We are winding up the tax season. The next thing, in next 3 to 6 months, IRS will be sending millions of notices to a lot of taxpayers, a lot of businesses for the IRS audit. In this episode, we'll bring to you what triggers an audit, how do you handle it, not to panic, and what can you do to make an audit go away without any consequences. How do you make sure that you have the right advice, right approach when the audit actually happens. So starting the audit, the first and the foremost, IRS is a business by itself. They target people who are making more money than the people making less money.
Yes.
There could be other reasons. There are plethora of reasons why the audit can happen, and we'll list some of them for you. But the first and the foremost, the amount of money you are making. If you are making more than $1 million, thank God, your audit probability is very high. Half the audit in this country happens for people who make more than $1 million. People who make less than $10,000, $20,000, they can be audited too. There are other reasons as well. But the philosophy is, the theory is, people who are making more money, they have more complicated returns, complex returns, and giving them a notice, IRS can easily collect more money by sending a notice to somebody who's making $1 million as opposed to sending a notice to somebody who's making a dollar.
Here I have a question.
Please.
When you say that, you know, if someone's making $1 million, chances are the tax return will be audited, right? Is it for the first time becoming a millionaire, or year after year when you're making $1 million, $1.5 million, $2 million, then still that threat of audit is going to be there? There is nothing
about the first time.
Okay.
It's all about how complex the return is. Statistically speaking, people who are making more than $1 million have much higher audit probability. But basically the reason behind it, very few people makes $1 million through a job. If you are making $1 million, you have multiple businesses, rent coming in, this active income, passive income, some losses coming from prior years, some foreign income exposure. So the tax return gets very complicated when you get to that level.
Correct.
So that's the main reason for the audit. But there is nothing like that in the first year you make $1 million, the audit probability is higher or lower. It's not about that.
Okay, what about businesses which are mainly based on a cash heavy
Absolutely, and you wonder out loud, Sanjeevji, right question, that my business is not making money, but why am I getting audited? Because your business is cash intensive business. If your business is one of those businesses, laundromat, grocery store, ethnic stores, where a lot of cash comes in that case, IRS knows how much cash typically comes in percentage wise in this area by a zip code. If you don't report any cash, IRS has access to your bank statement under the audit. So if they add 12 months bank statement, amounts, the deposits, and that's what you reported, meaning you did not report any cash, that's an audit red flag. It's not possible for a grocery store guy, or for a pharmacy guy, or an auto shop not to collect any cash. So please make sure you're reporting the right cash amount.
Okay, that's good to know. Now, can someone deliberately make mistake on a tax return with the math errors?
It's possible. Very few returns are paper filed. They still are paper filed, but most of the mistakes are about missing a document. A lot of people get 1099s, interest income, dividend income, a lot of these documents, and when you have 20, 30 of these documents, if you miss 1 or 2 documents, that could result into an audit. So IRS gets a report from all these people who are issuing a document to you. So a 1099 gets submitted to IRS, gets submitted to the state. When you're filing your own tax return, if you don't include a particular document, IRS is comparing your tax return with their file and say, oops, this is missing. So an automatic computer-generated audit letter comes to the taxpayer.
When you talk about documents, missing documents, that leads me to a question, Schedule C.
Absolutely. So Schedule C is one of the most audited schedules. Schedule C is typically meant for self-employed people, single member LLC, a side hustle, a proprietorship. So when you are doing your own taxes and you have a side hustle, people tend to get greedy. They claim home office expenses, they claim a lot of travel expenses, rent expenses. A lot of people ask us this question, what expenses can I claim? How do I save taxes? And the rule of thumb is, any expense that you wouldn't have had if you did not have the business is a business expense. Simply, any expense that you are having only because you have a business now is a business expense. Consider meals and entertainment. Would you be eating anyway if you did not have the business? Yes, you would be. It's not a business expense. Would you be living in the same apartment? Then you cannot share the apartment rent. Unless the office is an exclusive office where you typically see the clients coming in, you cannot claim the rent. How about the phone bill? How about the internet bill? How about the utility bill? Would you have had these expenses anyway? If you say, well, now I have it more, well, talk about the incremental expense. We'll claim those incremental expense as a business expense. My utility bill would have been $40 earlier, now it's $70. You can put the additional $30 as a business expense. But just be cognizant about it. It's not worth getting audited. The focus of today's topic is how to avoid audit, how to file your taxes, and God forbid, if the audit does happen, how do we handle it?
All right, that's interesting to know. Now, one of the other things I know, it's always it's always set as a red flag, which is a home office deduction.
Absolutely, and as we were talking about the Schedule C, in a typical home office expenses, the office has to be exclusively and regularly have to be used to see the clients, to have the client meetings. Just because you happen to have a table in your bedroom, that does not cut it as a home office.
Yes.
You cannot take it as a home office expense. If you own a home and you have an office in your home, a separate room, if you intend to sell it, just don't claim the home office expense. If you have a primary home, you sell it, then the capital gain is not taxable if you have been living in the home for at least 2 years in last 5 years. But if you have been claiming part of the home as a home office expense, part of the mortgage, part of the rent, which you have the right to, then when you sell it, that portion, that much percentage becomes taxable to you. So just plan ahead. Okay. Be careful.
That is very interesting. Home office deduction is something that people should be very careful with.
Absolutely.
What if somebody continues to show losses year after year after year?
That's another thing. If you have a for-profit business with an intent to make profit, and you are continually showing losses in your business, sooner or later, somebody will look at it. How do you survive? You live in $1 million home, you drive 2 cars, you have 2 kids, and your taxable income is $20,000. How does it all work? Where is the money coming from? especially when you keep showing losses year after year consistently, continuously. That creates another audit red flag.
Alrighty. Okay. With that note, we have discussed audit red flags and the first part of the segment. When we come back after these messages, we're going to continue our conversation on this matter, as well as AJ is going to come up with some real true examples, true cases where he's going to say that as a CPA and Sai CPA Services, how they help their client to save money out of the audit. That's all coming up after these messages. Welcome back to the second half of the Tax Talk with AJ. As I mentioned earlier, tax season is almost over, but Tax Talk never gets over. And we talked about the red flags, especially the things that people do on their tax return, which causes IRS to send out notices for the audit and whatnot, and how Sai CPA Services can help you with IRS tax audits also. As far as I know, Sai CPA Services is one of those reputable firms. They have helped hundreds of thousands of individuals. They have pulled them out from huge tax liability to almost nothing. And in some case, they made sure they get the refund, because that's where their knowledge and expertise and experience comes in the place, because that's where they have the knowledgeable staff, entire staff at Sai CPA Services, and they can definitely help you with the audit. In this segment, I'm going to request Mr. AJ to talk about some real life scenarios. We're going to block individuals' names and everything else, but we're going to show you a true IRS notice that client received and what happened after that.
Absolutely, it'll be my pleasure. So again, we are hiding the information that we are not showing, the social security number, name, and the IRS agency. But if you look at the screen, the first notice that we are showing is a real IRS notice. A client, if you look at the top right hand corner, the notice says 1065 filer. What it means is it's an LLC, flow through entity. An LLC is not supposed to be paying any taxes to the IRS. Why would you have a $3,700 notice from the IRS when the LLC is not supposed to be paying any taxes? Simply because the taxes were paid late. If you look at the computation quickly, so the tax penalty, and this is a 2020 notice, this is not a recent notice, as you see on the top right hand corner in the notice. So in 2020, the penalty was $210 per partner per month, and the computation looks $3,780 in the penalty. What it means is that tax return must have been filed 9 months late. If you take $210 per partner per month, 210 multiplied by 2, there are 2 partners, multiplied by 9, you get the number $3,780. Yep. The remaining $10.89 is just the interest on $3,780. How do you handle it? Call IRS, request a first time courtesy abatement. You have to use the same word, first time courtesy abatement, and this penalty can be waived in full, 100%, assuming you have not had a similar penalty in the past. The theory is, when you have a new business, when you have a new LLC, a lot of people don't know about the deadline. A lot of people misses the deadline. A lot of people makes mistake. So IRS gives you 1 courtesy abatement per business anytime. You get a notice, call the number given in the top right hand corner, request a first time courtesy abatement, and this notice can be waived off completely.
On that courtesy abatement, I'd like to ask you, with courtesy abatement, is that the CPA or the accountant have to call, or the taxpayer?
Anybody, the taxpayer can call. If the CPA, the problem is with the IRS hotline, it takes several hours,
forever,
couple of hours, 2, 3, 4 hours. So the CPA is going to call, they will charge you something. You try doing it yourself first. If it does not work, then you get the CPA involved.
Okay. So one point is that when you get a letter like this, don't be panicked immediately.
Absolutely.
That's the number one.
You're 100% right, Sanjeevji. You get the IRS letter, 90% of these letters are information request letter. We do not understand something. Please provide this information. There is absolutely nothing to be panicking about. Give them the information they want. Please make sure you respond to the notice. The last thing you want to do is not respond to a government notice. take responsibility. If you do not understand, find the person who filed the taxes, find a local accountant, local CPA, but make sure you respond to the notice.
Correct. That's the number one thing. Don't just sit on it. So respond to the notice and then move on. So just by one phone call, you save this individual's $3,700.
Absolutely, and they are client for life now, because they are extremely happy to save $4,000 on their notice. They were expecting to pay it.
Okay, so the thing is that they were not your clients when this tax return was filed.
Absolutely.
They came to you, I guess, after hearing from somebody, or
after
they
getting
find
this notice, they did their own research, and then they came to us. And once we waived the penalty, then they became the client. We pick up a lot more clients after the season than during the season. During the season, we are just so busy to pick up the new clients. We don't have time to pick up the new clients.
Correct, and that's why I want everybody to know is that after the season, it's good time for you to think about the person that you're going to be going to for your taxes next time, and do your due diligence and do contact Sai CPA Services for that. All right, so after AJ told us about client A and the real life scenario, that how Sai CPA Services and AJ Kumar helped them to save $3,700. Now we're going to go to the next client. Next client's case, real life scenario case, is also very interesting.
Absolutely. So if you look at the screen, in this case, this client does not make a lot of money. This client was making $40,000 on a Schedule C. In the first half of the show, we mentioned Schedule C is the most audited schedule. But if you look at the screen, you will see why this case was audited. I called the auditor when this client walked in. I said, why are you bothering the poor people? You don't have better things to do. I mean, we work with these auditors all the time. And this auditor said, Mr. Kumar, please look at the Schedule C first. And if you see on the screen, the income is $40,000. All the expense that you see over here, repair and maintenance, travel expense, other expense, everything is hundreds of dollars or thousands of dollars. Everything is rounded. How do you spend $6,000 into other expense? How do you have exact $23,000 into travel, $6,000 into repairs, supply? So it tells the government, it tells the computer system that all these numbers are made up numbers. So we picked up the case. When we picked up the case and when we did the audit, added all the receipts, all the expenses were actually higher than what the taxpayer reported herself. So we actually got a refund for the client after the audit. But the problem with the audit is the client couldn't sleep for 3 months. The audit does not go away in a day. You have to give it time. It can take 3 months to 6 months for any audit. And it's a stressful time. It costs you money, it costs you sleep. So doing it right has no substitution. But the moral of the story is, if you have an audit, do not panic. Make sure you respond to it. Make sure you call the number given on the notice. Find a good accountant, find a CPA, go with them and have somebody represent you, just to make sure that you are not doing something that you are not familiar with. Most CPAs, do these audits all the time. So working with somebody who has done this before can help you a lot.
And the other thing is, yes, all these things what you just said is right when you receive an audit letter, audit notice in the mail. But when you're rounding up numbers, use your common sense.
Well, absolutely.
Add
Don't
5s and 7s
numbers.
and zeros, and then you can't
don't
just do
estimate
0,
it.
0, 0, 0.
Do the best to get to the real number. If you have some theory around it, why did you do what you did? It will tell the auditor that you were not faking the number. You were not making it out of thin air. It's very important to show good intent behind doing what you're doing. Do not make up the numbers.
Absolutely, that is interesting, because rounding up is a good idea to rounding up. Obviously, it's okay, but don't make it too obvious when you have all 0, 0, 0, 0, 0, 0, 0, zeros.
It's your tax return. When you sign for it, you take the responsibility. Even if you have a CPA or an accountant file it for you, by signing the tax return, you are taking the responsibility for all your expenses, all your numbers. So the CPA can always say, these are the numbers that the taxpayer provided to us. It's your responsibility to make sure what you're signing is what you can justify.
All right. On the tax audit things that we're talking about, right? I just want to ask you one more question. This real life scenarios that you have told us, that's very good. Mixed business and personal expense. When they do that on a tax return, what are the chances of getting it audited? Extremely
high. We call it commingling of funds. If your commingling of the fund happens, where you have the business expenses going out of the personal account and vice versa, IRS auditor have the right to just disclaim, not take all those expenses as the deduction. Take an example. If you are buying water at Office Depot, we'll take it as an office expense. Maybe you're buying it for the clients, buying it for the staff. If you buy paper supply at Walmart or paper supply at a grocery store, we will not take it. You may have purchased other things as well. Unless you can save the receipt, unless you can justify, and the responsibility, the onus remains on you to justify what expenses you had at that store just by showing that I purchased this thing from Office Depot or Home Depot or wherever. That does not make it an expense. You have to have the business rationale, the need for the business, you have to have the invoice, and you have to have the proof of payment. Very important. Just having the invoice is not sufficient. You can go to Staples or Office Depot in the morning, by the evening you have collected $10,000 worth of receipt because people are just throwing it away. That wouldn't cut it. Along with the receipt, you have to have the proof of payment for each receipt with the same date. Only then they will take it as an expense.
All right. So with that note, we come to an end of this tax talk with AJ, but I must say that every tax talk is really, really important because AJ guides us and informs us, educates us when it comes to taxes, personal taxes as well as corporate taxes. But today, about the red flag and the audit matters and the real case examples, it was very interesting to know. We're going to continue perhaps the same matter next week also right here in our Tax Talk with AJ show. AJ, with that note, once again, thank you so very much.
Absolutely.
And remember, for all your taxes needs, Sai CPA Services is the place that you should be contacting. 908-380-6876 is their phone number. SaiCPAServices.com is their website, and in-person meeting, on Zoom, on the phone, anything and everything is possible. So do not put that matter away. Do contact Sai CPA Services, or even if you need someone for bookkeeping services or payroll services, Sai CPA Services can also help you out. With that note, I am Sanjeev Pandya, wishing you all happy and the tax-free days ahead. Thank you for watching the show. So long.